A lot of people think that investing in the stock market requires tens of thousands of dollars to get started or to make any money at all. But today I wanted to kind of prove that that's actually not the case and that you could really get started by investing just $5 per day into the right ETFs and eventually build significant wealth over the long term. Now, these three Vanguard ETFs are some of my favorite funds and, in my opinion, are some of the best to invest in, especially if you were starting out with as little as $5 per day. And these three Vanguard ETFs are called VGT, VYM, and VOO. I also just wanted to say really quick, thank you guys so much for 3,000 subscribers. And if you want to continue on this investing journey with me, then make sure to subscribe to the channel. So VGT is the first one out of this sort of three-fund portfolio. It's the Vanguard Information Technology ETF, and since it's so heavily weighted in the tech sector, it holds and tracks some of the fastest growing companies in the world like Microsoft, Apple, and Nvidia. So when we are going through a healthy bull market, when stocks are starting to heat up, this ETF produces those year-over-year double-digit returns. And we can see this by looking back at its 5-year return of over 176%, and its 1-year return at about 45%, as we've seen the tech sector continuing to climb high. Now, with VGT being a tech sector ETF, it's going to have a slightly higher beta, meaning it's going to have a little bit more aggressive ups and downs, or in other words, more volatility. And as we know, more volatility means a little bit more risk, but with more risk comes more reward. So needless to say, VGT is kind of the turbo in this portfolio and helps fuel that growth to bring higher yearly gains. The next one in this three-fund portfolio is VOO, which is one of the most popular Vanguard ETFs and is a perfect anchor for really any portfolio and comes with a good blend between growth and dividend income. So VOO pays a 1.4% dividend and does still hold some of those fast-growing tech companies like Google, Microsoft, and Meta, but has a lot less weighting towards tech and growth stocks than that of VGT, and is a lot more diverse with over 500 different holdings. And if you want to be even more diverse and go more broad, you can invest in VTI instead of VOO. The returns of the two are relatively the same, but VTI is even lower risk with slightly lower returns because it holds over 3,700 different stocks. And if you look at the comparison between the two returns, you can see that VOO tends to have slightly higher gains because it is a little more concentrated on the S&P 500 rather than the total market. So you can decide for yourself which one between the two you'd rather choose, but for me, I tend to just go with VOO. So the last one of the three is VYM, or the Vanguard High Dividend Yield ETF, and is of course more focused on dividend income rather than high growth. It's currently paying a 3% dividend, and most, if not all of its 450 different holdings are extremely high quality companies that have been paying a dividend for multiple decades in a row. So the ETF itself does tend to be more of a slow grower, but in my opinion is perfect for this three-fund portfolio because you're receiving those consistent dividend payments which help to compound those returns. So now that we've talked about the three funds, let's now go back to talking about investing $5 a day. So I could be like Dave Ramsey and talk about how instead of drinking that $5 cup of coffee every day, you could be investing it, and this is how much you'd have after a certain amount of years. But instead, let's jump into our backtesting tool and find out how much we would have today if we simply just invested $5 every single day into this three-fund Vanguard portfolio if we were to have started doing this 10 years ago. So starting with just $5 back in 2014 and adding $5 per day or $150 per month with an equal split between the three ETFs, you'd have just under $43,000 today. And these are the actual results. It's exactly how much you'd have today by investing that much per month. And keep in mind that that's only after 1 decade. So we can see exactly how much we'd have today if we were to have started this method 10 years ago, but we can't really predict the future, so we'll kind of have to assume that this three-fund portfolio will return about 8 to 10% on average every year going forward. So starting with $5 today, or right now, and investing $5 every single day with an average of 9% each year, you'd end up with over $600,000 after 40 years. Now, in my opinion, the number one goal is to invest as much as you possibly can in order to maximize that number after 40 years. For example, if you invested $10 per day instead of $5, that 600,000 would instead be 1.2 million after 40 years. So I just wanted to show you guys the power of investing even just $5 a day into high quality ETFs like the Vanguard funds we talked about today, and the amount of wealth you can build from compound interest over time. As always, guys, let me know in the comments below what your thoughts are, and I'll see you next time.